Hello everyone, today we dive into the world of exchange-traded funds, specifically focusing on the top Canadian growth ETFs you might consider adding to your portfolio. If you've been looking for a way to diversify your investments and optimize your financial growth, you've come to the right place. This video will serve as a guide, shedding light on some of the most promising Canadian growth ETFs that could be the next big addition to your portfolio. But before we delve into the specifics, let's take a step back to understand the fundamentals. What exactly are ETFs? Why are they so important in the world of investments? Exchange-traded funds, or ETFs, are investment funds traded on stock exchanges, much like individual stocks. They offer a unique blend of the diversification benefits of mutual funds and the ease of trading that comes with stocks. As we move forward, we'll explore why ETFs have become such a preferred investment tool for many. They offer vast diversification, liquidity, and flexibility, making them an attractive option for both novice and seasoned investors. Now, narrowing down to Canadian growth ETFs, these are funds that focus on Canadian companies expected to grow at an above-average rate compared to other companies in the market. These ETFs offer an excellent opportunity for investors to tap into the growth potential of Canada's vibrant and diverse economy. So, what's in store for you in this video? We'll be taking a closer look at some of the top Canadian growth ETFs, breaking down their performance, their composition, and why they could make a great addition to your portfolio. We'll also shed light on some key factors to consider when choosing an ETF, helping you make an informed investing decision. Remember, investing is not just about making money. It's about making informed decisions, understanding the risks, and strategically planning for the future. And that's precisely what we aim to assist you with in this video. So, buckle up as we embark on this financial journey together. Before we delve into our list, it's crucial to understand what ETFs are and how they function. Exchange-traded funds, or ETFs as they're commonly known, are investment funds traded on stock exchanges, much like stocks. They are designed to track the performance of a specific index, sector, commodity, or asset. This could be anything from the S&P 500 index, a sector such as technology or healthcare, a commodity like gold, or an asset like real estate. Imagine an ETF as a basket. This basket contains a variety of different investments such as stocks or bonds. When you purchase an ETF, you're buying a small piece of this basket, thus gaining exposure to all the assets within it. This allows for diversification, as you're not putting all your eggs in one basket, so to speak, but rather spreading them across a collection of investments. One of the major benefits of ETFs is their flexibility. Unlike mutual funds, which only trade at the end of the trading day, ETFs can be bought and sold throughout the trading day at market prices. This means you can react quickly to market changes, making ETFs a popular choice for both active and passive investors. Additionally, ETFs are known for their cost-effectiveness. Most ETFs are passively managed, which means they aim to mirror the performance of an index rather than trying to outperform it. This passive management results in lower operating expenses, which are often passed on to the investor in the form of lower fees. Another appealing feature of ETFs is their transparency. ETF providers are required to disclose the fund's holdings on a daily basis, so you always know exactly what you're invested in. This level of transparency is not always available with other types of investment funds. Lastly, ETFs provide an easy way to gain exposure to a wide range of markets and sectors. Whether you want to invest in the broad market, a specific sector, or even a foreign market, there's likely an ETF that fits your needs. It's important to note, however, that while ETFs offer many benefits, they also come with risks. Just like any other type of investment, the value of an ETF can go up and down, and there's the potential to lose money. As with all investments, it's important to thoroughly research and understand what you're investing in before making a decision. With this knowledge, you're now ready to explore our top picks of Canadian growth ETFs. Choosing the right ETF is not as simple as picking one from a list. There are several factors to consider. So let's unpack these factors to give you a solid foundation for your investment decisions. Firstly, consider your risk tolerance. Are you a cautious investor, preferring to play it safe, or are you willing to take on more risk for potentially higher returns? Your answer will guide you towards the right type of ETF. Secondly, ask yourself about your investment goals. Are you looking for long-term growth, or do you need regular income from your investments? Certain ETFs are better suited to specific goals. For example, growth ETFs are ideal for long-term investors, while income-oriented ETFs can provide regular dividends. Next, it's time to delve into the nitty-gritty fund performance. It's essential to look at an ETF's past performance, but remember, it's not a guarantee of future success. A fund that has consistently performed well over a long period may be a safer bet than one that has recently shot up in value. Fourthly, don't overlook the expense ratio. This is the cost of owning the ETF expressed as a percentage of your investment. While a lower expense ratio is generally better, don't let it be the sole factor in your decision. Sometimes a higher expense ratio can be justified by superior fund performance or a unique investment strategy. Lastly, consider the fund's underlying assets. These are the actual investments the ETF holds. Some ETFs invest in a broad range of assets, while others focus on a specific sector or country. Make sure the ETF's assets align with your investment goals and risk tolerance. So there you have it. 5 critical factors to consider when choosing an ETF: risk tolerance, investment goals, fund performance, expense ratio, and underlying assets. Each of these elements plays a crucial role in determining the potential success of your investment. Now that you know what to look for, let's jump into our top Canadian growth ETFs. Our first set of top Canadian growth ETFs are ones that you'll certainly want to keep tabs on. Let's dive right in. Firstly, we have the iShares S&P/TSX Capped Information Technology Index ETF. This fund has been a star performer thanks to the rapid growth of technology and digital industries. With its focus on the technology sector, it offers a unique angle on the Canadian market, which is typically dominated by financials and commodities. The fund has a solid track record, delivering impressive returns in the past 5 years. It's also diversified across a range of tech companies, offering a balanced exposure to this dynamic sector. Next, the BMO Junior Oil Index ETF is worth a look. Even amidst the global shift towards renewable energy, the oil and gas sector remains a significant part of the Canadian economy. This ETF provides a targeted exposure to junior oil companies, which are smaller, more nimble, and often exhibit higher growth potential compared to their larger counterparts. With a considerable number of assets under management, the BMO Junior Oil Index ETF has demonstrated resilience and a steady growth trajectory. Lastly, for today, we have the Vanguard FTSE Canada All-Cap Index ETF. As a total market fund, it provides broad exposure to the Canadian equity market, encompassing small, medium, and large-cap stocks. This ETF has consistently been a reliable performer, offering a healthy mix of growth and stability. It's a great option for those looking to invest in the Canadian market at large, rather than focusing on specific sectors. Each of these ETFs brings something different to the table. From sector-specific funds like the iShares S&P/TSX Capped Information Technology Index ETF, to more diversified options like the Vanguard FTSE Canada All-Cap Index ETF, they offer a variety of ways to tap into Canada's growth potential. But remember, these are just the first few we're discussing. There's plenty more to explore in the world of Canadian growth ETFs. These are just the beginning, there's more to come. Continuing with our list, let's dive into a few more top Canadian growth ETFs worthy of your attention. First up, we have the Horizons Marijuana Life Sciences ETF. Yes, you heard right. This ETF might pique your interest if you're looking for something a bit unconventional. The marijuana industry is rapidly growing, and this ETF provides exposure to a diversified group of companies with significant business activities in the marijuana industry. The Horizons Marijuana Life Sciences ETF has seen a remarkable performance surge in recent years, indicating strong potential for future growth. With assets well into the hundreds of millions, it's clear that many investors see the potential in this burgeoning industry. But remember, while the potential for high returns is great, so too is the potential for volatility. So, consider this ETF if you have a higher risk tolerance. Switching gears, let's look at the iShares S&P/TSX Capped Information Technology Index ETF. This ETF is a solid choice for those wanting to tap into the potential of the technology sector. Tech has been a powerhouse sector globally, and Canada is no exception. The iShares S&P/TSX Capped Information Technology Index ETF has a performance history that showcases consistent growth. With a robust portfolio of assets, this ETF offers a diverse range of tech stocks, including software, hardware, and semiconductors. If you believe in the continued growth and innovation in the technology sector, this ETF might be a perfect addition to your portfolio. Last, but certainly not least, let's discuss the BMO S&P/TSX Equal Weight Banks Index ETF. This ETF focuses on the banking sector, a cornerstone of the Canadian economy. The BMO S&P/TSX Equal Weight Banks Index ETF holds assets across Canada's major banks, providing a balanced exposure to this essential industry. The performance of this ETF has been impressive, with consistent growth and a strong track record. The banking sector is generally considered a safe bet for steady growth, making this ETF a potentially reliable addition to your portfolio. Each of these ETFs brings a unique offering to the table, from the fast-paced world of tech to the steady reliability of banking and the exciting potential of the marijuana industry. They all have shown strong performance and boast substantial assets, making them worthy considerations for your portfolio. But as always, it's crucial to remember that investing in ETFs, like all investments, comes with risks. It's essential to do your research, understand your risk tolerance, and consider your financial goals before making any investment decisions. We hope these options give you a good starting point in your investment journey. So there you have it, our top picks for Canadian Growth ETFs. In the past 15 minutes, we've journeyed through the world of exchange-traded funds, or ETFs as they're commonly known, and specifically we've focused on some of the most promising growth ETFs from the Great White North. We've explored, dissected, and analyzed these financial instruments, and we've laid out the top Canadian growth ETFs you might want to consider adding to your portfolio. Let's take a moment to revisit the key highlights from our discussion. We started off by getting to grips with the basics of ETFs, understanding how they work and why they are an essential part of a diversified portfolio. We've established that ETFs offer an easy way to invest in a broad market sector, an entire index or a specific industry, without having to buy shares of individual companies. Then we moved on to the factors that one should consider when choosing an ETF. We talked about the importance of looking at the ETF's past performance, its management expense ratio, the diversification it offers, and the liquidity of the ETF. These factors, we've determined, can significantly impact your return on investment. Next, we embarked on a deep dive into our top picks for Canadian growth ETFs. We covered a variety of ETFs, each with their unique strengths and potential for growth. We explored funds that focus on the tech sector, those that invest in healthcare, and even ones that track the performance of the Canadian market as a whole. These ETFs, we believe, offer a mix of stability and growth potential that can be a great addition to any investment portfolio. But remember, while we've done our best to provide you with accurate and helpful information, it's crucial that you conduct your own research before making any investment decisions. The world of investing can be unpredictable, and while ETFs can provide a level of protection against market volatility, they are not immune to it. Investing is not just about following trends or buying the most popular stocks. It's about understanding your financial goals, your risk tolerance, and your investment horizon. It's about making informed decisions based on solid research and sound advice. So before you dive into the Canadian ETF market, take some time to reflect on your investment strategy. Ask yourself what you're hoping to achieve, how much risk you're willing to take, and how long you're planning to stay invested. And most importantly, never stop learning. Don't forget to subscribe for more content like this. Stay savvy, stay investing, and we'll see you in the next video.